Are you truly prepared for the seismic shifts barreling toward us? Or are you about to get left behind in the dust? Today, we're cutting through the hype, the bubbles, and the noise to reveal the 5 game-changing AI trends that will shape your financial future and determine whether your investments thrive or crash. The stakes are higher than ever. Why this moment matters. Today, we're diving deep into one of the most critical questions facing investors right now. Will AI supercharge your portfolio in 2026, or will it make it totally obsolete? And trust me, the answer isn't simple. It's a nuanced, high-stakes game that could define your wealth for decades to come. Right now, valuations are at dizzying heights. Take Palantir, a data analytics company trading at 250 times earnings, 225 times cash flow. Nvidia, still at around 55 times cash flow. Those numbers are staggering. They highlight one thing. The market is betting big on AI. But big bets come with big risks. You see, bubbles don't burst because valuations are high. No. They burst when everyone believes prices will only go up forever. Think back to the dot-com bubble of 2000. Everyone was convinced the internet was going to change everything forever. Stocks like Pets.com soared, and entrepreneurs quit their jobs to chase the dream. But then reality hit, and the bubble burst. Thousands of investors lost everything. So, are we in a bubble now? Or is this a new era of sustainable growth? Today, I've got insights from Mark Leichenfeld of the Oxford Group, a guy with some controversial but proven strategies for navigating these waters. He's got some picks and shovels for the AI gold rush and some warning signs for when the bubble might pop. The bubble myth. When do bubbles actually burst? Here's a truth that's often overlooked. Bubbles don't burst because valuations are high. They burst when everyone thinks it's only going up. Remember 2000? The market was on fire, everyone was buying tech stocks, and then crash. Today, valuations are high, but that doesn't necessarily mean disaster is imminent. In fact, high valuations can persist longer than most people expect. It's only when investor sentiment shifts, when everyone starts to think, maybe I should sell, that the music stops. So, what triggers the burst? Usually a catalyst, like an economic downturn, a major tech failure, or a geopolitical crisis. And here's a key insight. Bubbles tend to burst not when everyone is worried, but when everyone is overconfident. Right now, the hype around AI is deafening, but that's often the sign it's nearing a peak. So, what does that mean for you? It means you need to be prepared, not to panic, but to recognize the signs of a top. And that's where contrarian investing comes in. Contrarian investing, the power of going against the crowd. Here's a powerful investing tip. Wall Street analysts, they're often late to the party. They're rating stocks as hold or sell, just as the big gains are happening. I prefer to look where the crowd isn't, stocks that insiders and contrarians are betting on. Why? Because these stocks tend to explode after the mainstream finally catches on. For example, Mark recommends a little-known utility, Black Hills Corporation, BKH. Now, you might not have heard of it, but this company is building a power infrastructure boom in rural Wyoming and South Dakota. They're powering new data centers for Microsoft and Meta, and the company expects 5 to 7% earnings growth before the data center boost. And get this, they've raised their dividend every year since 1971. It's a perfect example of a contrarian, undervalued stock that could explode as data centers and AI demand soar. Investing in hidden gems like this can be the difference between riding a wave of growth or getting crushed in the crash. The safe play: food, fertilizer, and defensiveness in uncertain times. But what if you're skeptical about the entire AI hype? What if you believe the bubble's about to pop? Well, I've got a contrarian pick for that too. Nutrient Lati, NTR. This Canadian fertilizer giant is practically immune to AI hype because at the end of the day, everyone has to eat. No matter what happens in AI, farmers will keep producing food, and the demand for fertilizer will stay steady or grow. Nutrient owns 20% of the global potash market, a crucial ingredient for fertilizer. And here's the kicker. They're trading at just 13 times earnings, with a 3.5% dividend yield. Even if AI disrupts some industries, food supply remains a rock-solid defensive investment. Plus, they've increased dividends every year since 2018, showing steady financial health. It's a hedge against the AI bubble bursting, and an opportunity to profit from the fundamental needs of humanity. The big picture: 5 major AI trends to watch in 2026. So, with all that in mind, what are the 5 big AI trends that will determine whether your investments succeed or fail in 2026? Let's break them down. Trend 1. The agentic AI revolution, moving from reactive to proactive. First up, the shift from reactive AI, like ChatGPT, to agentic AI, systems that act on their own. Imagine AI that manages your investments, flags risks, and makes decisions automatically without waiting for your commands. Market forecasts? The market for AI agents could grow from $5.4 billion today to over $15 billion by 2030, a tenfold increase. Investors should look for platforms that build secure, trustworthy, and autonomous AI systems. It's about governance, data advantages, and reliability. Trend 2. The infrastructure boom, powering the data center future. Number 2. The infrastructure story. It's no longer just about chips and semiconductors. The real bottleneck? Power. Data centers consume staggering amounts of electricity, and utilities are investing trillions to upgrade the grid. In rural areas like Wyoming and South Dakota, new data centers are springing up, powered by cheap land and abundant, affordable energy. Companies like Constellation Energy and NextEra Energy are building the backbone for AI's energy needs. This infrastructure investment is a multi-trillion-dollar opportunity that will reshape energy markets for decades. Trend 3. The AI IPO wave, disrupting the market and forcing consolidation. Number 3. The coming wave of AI IPOs. Big private AI companies like OpenAI and Anthropic, already valued at billions, will soon test the public markets. This could unleash a flood of new giants, but beware, the market is already overheated, with tech valuations at historic highs. This wave will trigger massive consolidation, with the strongest players with deep proprietary data and real enterprise solutions emerging victorious. The winners? Companies with the infrastructure, the data, and the enterprise relationships. Trend 4. Hybrid stacks, practical, widespread adoption. Number 4. The rise of hybrid AI stacks. Companies are no longer putting all their eggs in one basket. They're combining general-purpose AI tools like ChatGPT with specialized purpose-built AI platforms tailored to their specific needs. For example, a private equity firm might use a general chatbot to summarize documents but rely on a bespoke AI to scan hundreds of files and flag violations of their investment rules. This practical approach is the second wave of AI adoption, and it's driving real revenue and efficiency gains. Trend 5. AI risk management and active portfolio strategies, the key to survival. And finally, managing risk. Valuations are sky high and uncertainties are everywhere, from data bias and hallucinations to geopolitical tensions. Passive investing? That's a risky game now. Leading firms like BlackRock are using their proprietary AI platforms, like Aladdin, to navigate volatility and avoid catastrophic losses. Active management, diversification, and a focus on risk mitigation will be the critical tools to survive and thrive in 2026. The future is a choice: act or be left behind. So there you have it, 5 transformative AI trends that will shape your investments in 2026. This isn't just about flashy apps or hype. It's a multi-layered transformation that will impact everything from energy to markets, from enterprise software to geopolitics. The question is, are you skating to where the puck is going, or are you waiting for the crash to catch up? Drop your thoughts below. Are you bullish on the infrastructure boom, or are you betting on the next great AI application? Remember, success in this new world isn't about blindly chasing yesterday's winners. It's about understanding where the puck is headed and positioning yourself accordingly. Thanks for watching, and I'll see you in the next video.